Thank you. My name is Willem Keogh. I represent STOXX, so we are an index provider. My main responsibility is, or since I've joined STOXX, is to create all the low carbon indices, all the climate indices, and all the ESG solutions over the past 4 years.
Olivier Cassé.
So ESG, we believe, is not a niche product anymore. It is mainstream now. If we look around the world, we see that obviously Europe is extremely strong. It has a dominant position. It is seen as a leader. If you go to Scandinavia, they are really seen as even further ahead than some of the other European countries. The US is catching up quite quickly, depending on what happens with the president. Usually what his ideas are a little bit strange. But we've seen enormous growth from an ESG perspective from Asia, in particular in Japan. So ESG was not on the map, and the government took in 2014 and 2015, they started introducing codes. So first a stewardship code, and then after that the corporate governance code. And all of a sudden you can see with the GPIF and all of the big pension funds, or one of the biggest pension funds in the world, there's a big push to bring ESG on board. So the growth in assets has been enormous in percentage terms, but it comes from a very low base. So how is ESG usually introduced? What kind of strategies are out there? What kind of money is behind these strategies? Important always is the negative screening. So screening for UN Global Compact contravention, screening for controversial weapons, screening for tobacco. These are the kind of negative screens where companies are excluded from indices and portfolios. By far the most amount of money is behind that. It's very simple to explain, it's very easy to implement. Most companies have a responsible investment policy, which they say we either do not invest in a certain sector. So coal obviously is a hot sector, tobacco is a hot sector, and then these kind of companies are taken out of the solutions. We're starting to see quite a lot of growth in ESG integration, where it becomes more, it's more a deep dive, it's more focusing on specific themes. Renewable energy is quite a strong theme. We're seeing something like women leadership is an enormously strong theme for us, where we see a lot of growth around that. Corporate engagement and shareholder action, that is something that we see a lot where, particularly around climate, where the oil companies are under severe pressure, the basic resource companies are under severe pressure, because in essence the asset owners, like the Access of the world, say that we are not happy with the way in which you are conducting your business. You need to move away from the old style of business. You need to change your company to become more 2-degree compliant instead of continuing on this old path. And I think these shareholder resolutions are extremely important, because we see a lot of changes happening. There's a lot of pressure on these companies. And in essence, if you pass a shareholder resolution, by law, the company then has to do something about it. And I think this is a very, very powerful tool that the big asset owners have, and that they are starting to use more effectively than in the past. So this important, how important is the screening process when you create a solution? It is absolutely crucial, because we can not only build a benchmark solution with a wide audience, we can now go into deeper dive where we can look into particular KPIs. So for us at STOXX, it's always very important. We don't do our research in terms of data in-house like some of our competitors do. What we like to do is we evaluate different data providers who we feel are specialists, and then we use them. So we want to say that from a STOXX perspective, we use a best-in-class approach. So we feel that we are quite good in building financial solutions. So we are more financial engineers, and then we partner up with data providers that are extremely good. Sustainalytics, CDP, we are even going into the world of AI now, and the whole reason for that is we try and build an enormous base of data across different specialities, and we're starting to use this data more and more together. The important part with ESG, climate, low carbon, is that these were usually seen as three different parts. And what we want to do is trying to standardize a little bit across these disciplines. We are seeing enormous requirements from our clients to build what we call integrated solutions. So it's not enough to build a low carbon index anymore. It's not enough to build a climate index, or not enough to build an ESG index. And we are now incorporating all of these different data sets, incorporating more the ideas behind it to try and also keep pace with what is happening from a regulatory perspective. And here we have done a client consultation where we wanted to see if we could build a benchmark that is ESG compliant. So we try to cover the responsible investment policies of the major asset owners across Europe by applying certain exclusionary criteria. So we've decided to go for the normal exclusions: UN Global Compact, controversial weapons, we've done tobacco, we've done coal, and in terms of coal we've also looked in terms of electricity production. So looking at companies that still have coal-powered or coal-fired power plants to try and take these out as well. So in essence, the push is more for utilities to transform faster. There are a lot of utilities that are actually transitioning towards renewable energy, and I think this is extremely important to have these kind of transitions. But for us as a benchmark provider, it's also important to have a product where the access of the world can actually invest in without having trouble, because traditional benchmarks have got companies in there that are involved with controversial weapons, that are involved with UN Global Compact, and it becomes very difficult for the clients to invest in that. So that is why we built this STOXX Europe 600 ESGX index, which is based on the STOXX Europe 600, one of the biggest benchmarks in Europe. We've taken out these names, and in essence we've created an index that is now compliant. It is also free float market cap. We only took out about 17 or 18 companies, but this index now looks and feels like the STOXX Europe 600. There's a very interesting development on that index, and I'll come to that in a little bit, one of the later slides. So the complexity around, as I said, green, ESG, SRI, where do we focus, what is it that we want to do? In essence, we've seen after COP21, as was alluded to earlier, this Article 173 from the French regulator, that ESG and climate needs to be taken into account. So that is all about lowering the carbon footprint of the index. So STOXX has a number of indices that are low carbon friendly. We have climate indices where we look at companies that are transitioning already. So we're trying to get ahead of the curve on that. We're starting to see now further regulation within the European Commission, where they're looking to regulate low carbon and positive carbon impact indices. This is something where we, and I'm in particular, am part of these work groups, because in essence it is important that the regulators understand the challenges that we have as a benchmark provider, the data challenges that we have, the challenges that our investors have on how to tackle this problem. It's easy to write a law, but we need to be careful not to destroy the ultimate aim. So in essence, we are trying to work together with a broad base of stakeholders to create something that is meaningful in the end. Again, I want to allude to the open architecture that we have by using the different data providers, because that allows us to build indices and to build benchmarks that are very compliant and that take a lot of different themes into account at the same time. So, does ESG investing really benefit? Does it bring benefits in terms of returns? I think over the past decade there's been a lot of studies done that shows that ESG really does bring benefit. I think our line is always that we believe that companies that have very good ESG, very good climate policies and strategies it can be used as a proxy for companies that are very well run. So if you look at how advanced some companies are and the amount of strategy that they have to become 2-degree compliant, it gives you a proxy of these companies are well run, and it is very seldom that some form of disaster pops up in these companies. So in essence, we're using it as a risk mitigation measure, and also to say we don't want to be in the headlines constantly with companies that are falling foul of these challenges. Again, I want to focus on the STOXX Europe 600 ESGX, which is the first benchmark that is ESG compliant. In terms of climate and carbon emissions, we have a whole suite of family of indices that is built from a low carbon perspective. We've moved on really from the low carbon type of indices towards what we call our climate indices, because here we are capturing companies that are publicly committed to changing how they are transitioning their companies into becoming more 2-degree compliant. So I think as we get more data, we work closely together with CDP. CDP have integrated TCFD, also science-based targets this year into their questionnaire, and we're getting better and better data in order for us to capture the companies that are truly already on the way to becoming 2-degree compliant. And then in terms of ESG, we also have indices that are what we call best in class. So here we select companies that within their peer group fall probably within the top quartile. These are companies that are extremely well run. They're extremely focused on ESG, and this provides some of our clients with solutions where they are looking only to invest in the creme de la creme. Now, the view of the future that we have is we believe ESG, climate, it is now at the forefront of what the man in the street talks about. It is mainstream now. It is not a niche product anymore. The amount of assets that are tied to ESG investment, climate investment, is enormous, and it is growing by the year. So it is important for us to understand that we create benchmarks that are fit for purpose. I think the challenges that we have in terms of benchmarks is that we have a lot of push from clients, we have a lot of push from asset owners, we are now seeing a lot of push from regulators who want to regulate how these indices are, or these benchmarks are created, and that leads to challenges for us, but in a good way, I would say. I think it's very important that we understand that in essence some of these indices are now becoming quite complex. And I think the complexity or the challenge for us is to be able to build something that is still liquid, that is reasonable and represents complexity. From my previous life, I can build crazy stuff. There's no problem for me. But the point is we also have to build something that is sensible. And what we're trying to achieve is we want to take into account the direction that the asset owners like AXA are following. We want to assist them on this path, and we want to build instruments for them in which they can still invest a lot of money. It is very easy to build a very, very green index, but it may not be able to handle the capacity that we're talking about. It's one thing to invest 100 million. It's a completely different animal if you want to invest 3 or 4 billion into a solution. And this is where the complexity for us comes from, is to tick all the boxes and then still make it investable. And as part of that, with this STOXX Europe 600 ESG index, we are working together with Eurex to launch derivatives on this index. So in essence, now that we have a benchmark that is ESG compliant, the natural step obviously after that is to launch a future on it, because that makes it very easy for clients to invest in. So the whole idea that we want to do is we want to create a big liquidity pool, so we will have market makers who will make a very tight market on this index, on this future. It becomes very cost effective to trade. So the idea is, again, we want to create liquidity, we want to lower the cost of trading, and in essence we want to provide the clients with both the benchmark and the derivative built on top of it to make it easy for them to hedge or to make it easy to invest in it. I mean, I think that is the next step where we will see an evolution on this. not only are we going to launch the STOXX Europe 600 ESGX as a future, we're also going to launch one of our climate impact indices. There will be a feature on that, and there will also be a feature on our STOXX 50 low carbon. And I think that is very important to provide these kind of benchmarks, provide more liquidity, drive down the cost of trading, and increase the liquidity on our already liquid indices. I think that is it.
Yeah, great. So just want to